Hey everyone, so in this video I'm going to be discussing what an HSA is, a health savings account, and how you can add that to your long-term wealth building strategy. So first off, what is an HSA and how does it work? So an HSA is attached to your health insurance and anybody can qualify for it as long as you have a high deductible insurance plan. So what is the advantage of having a high deductible insurance plan is that you have lower monthly premiums. So most of the time it works that you have a high deductible, and once you meet the deductible, typically the plan will pick up 100% of the costs after that. So if you're able to meet the plan's deductible, after that all emergency insurance coverage, everything is covered at that point 100%. So let's talk about who can qualify for an HSA, right? Again, it has to do with your insurance. So as long as you yourself have a high deductible plan, which if it's you yourself is $1,400 and for family is $2,800, look up the numbers for the given year because they can change every year. But typically, high deductible plans range closer around the $5,000, $7,000 range. Now, there is no salary limit when you have an HSA attached to your health insurance. So what does an HSA mean exactly? Well, you are allowed to contribute to an account pre-tax, all right? So here's what it means. You can write off your contributions to your HSA. So let's give you an example of how that works, okay? Let's say you have a $1,000 medical bill, right? Now, if I had a $1,000 medical bill, how it normally works is I would make $1,250. I would have to make more than $1,000 because after I pay taxes, I'd only be left with $1,000, right? I'd have to make like $1,200 or $1,300, and then I'll net the $1,000 that I paid. Now, if you contribute the money to an HSA, it's pre-tax income, which means I reduce the amount that I contribute that year on my tax bill. So, for example, if you made $10,000 that year and you have a $1,000 medical bill, if you contribute $1,000 to your HSA, now your actual tax liability is only $9,000. So in effect, you're able to save the difference on the taxes by funneling the money through an HSA. So that's one great advantage of it, but that's not the only reason to get an HSA. This plan is best for two types of people, okay? The two types of people are someone who has chronic health issues that every single year you're going to meet your plan deductible and then they will take over 100% of the medical expenses after that. And it's a way for you to write off those medical expenses up to the contribution amount. And it's also for someone who is really healthy. If you are really healthy and you don't have any medical issues, you just go to do your normal annual checkup, then there's no like the advantage is that you can have a lower premium, right? Because you're not going to be having to pay money out of pocket to meet a deductible. Now, let's talk about what the HSA actually is. So, outside of what you're contributing for medical expenses, you can contribute to this account so that it can grow, which means if at a point in the future you had a medical emergency, you can pull from that account to pay for the medical expenses. Now, all the money that is contributed to that account will grow 100% tax-free if it is used for medical expenses. And that's very powerful because it's a way to grow money tax-sheltered. And let's say that money is not used for medical expenses, then when you retire, you would follow the same sort of guidelines that you would use for your retirement account. The money that you withdraw from there would become taxable income, but for this entire period of time, the money is able to grow tax deferred, right? And that's very powerful for compounding interest. The other advantage of an HSA is that you are actually able to self-direct the funds, right? So you can make an HSA, have the account, you're allowed to contribute $3,500 a year. So if you have no medical expenses, that money can now start growing. The next year you contribute another $3,500. You let it keep growing, and then eventually you can self-direct that money, which means now you can take that money and invest in what you know best. So if you want to get into real estate with that money, you can get into real estate with that money. If you wanted to get into cryptocurrency or gold or whatever, you can do that. Now, I recommend real estate for its foundation. It's where I am comfortable. So I would want to use that money to get into real estate, because then I can grow that money so that if in the future I ever have a medical expense, I just pull from that fund, meet my deductible, and then the insurance plan will cover the rest of my medical bill. So if you have an emergency, like you tear your ACL or some other injury that may occur, or some sort of health condition, that is a nice chunk of money to have set aside to meet that deductible if you needed to. And again, if you have to use it to meet that deductible, it comes out 100% tax-free. So it's a very powerful tool. It's a way to continue building wealth in a tax-sheltered account, because at the end of the day, taxes are our number one expense that we have to pay. That's our largest expense throughout all of our life. So finding creative ways to reduce that tax liability, that is where the true power lies in using an HSA. So I hope this helps. If you guys have any questions, please comment below. Ask your questions so that I can elaborate more on how this works and how it can fit into your own wealth building strategy.